The question, what if Bitcoin fails, is perhaps the most important one any prospective Bitcoin investor must address. It's a necessary contemplation that separates the true believer who understands the underlying technology from the speculative gambler. For Bitcoin to truly fail, its collapse would require not just a price crash, which happens all the time, but a fundamental, permanent, and irreversible breakdown of its core technological, political, or social components. Let's analyze the three major categories of existential threats and why the decentralized architecture is designed to withstand them. First, the catastrophic technical failure or the code threat. The most immediate fear is that a fatal law in the code or cryptography is discovered, allowing an attacker to steal all the coins or arbitrarily create new ones. Bitcoin relies on two key cryptographic standards: SHA-256 for proof-of-work mining and transaction hashing, and elliptic curve digital signature algorithm, or ECDSA, for verifying ownership. If a mathematician or computer scientist discovered a quick way to reverse SHA-256 or to derive private keys from public keys, the network would be compromised. However, this is very unlikely. Bitcoin's cryptographic components are not secrets. They are open source, global standards used by governments, major banks, and security institutions worldwide. These protocols have been subjected to constant, high-stakes review by the world's most brilliant cryptographers for decades. The mere existence of Bitcoin incentivizes a global community of developers and hackers to constantly search for flaws. The longer Bitcoins run securely, the more confidence we can have in the immutability of the underlying math. The system relies on known, well-tested cryptographic security. Then there's the quantum threat. A more plausible long-term technical threat is the advancement of quantum computing. A fully operational, large-scale quantum computer could potentially break ECDSA, meaning that an attacker could calculate the private key from a public key, stealing coins from wallets that have previously broadcast their public keys. Why this is manageable? First, the immediate threat is still theoretical and years away. Second, Bitcoin's protocol is upgradable. The core developers are well aware of this risk and are actively researching quantum-resistant cryptography. Before quantum computers become a practical threat, the Bitcoin network can implement a soft fork to transition to quantum-safe signature schemes, protecting all future transactions and unspent transaction outputs. The threat is one of adoption, not guaranteed destruction. Number 2, the total regulatory or political suppression. Another potential failure mode is a coordinated, global, and comprehensive regulatory crackdown that effectively bans and enforces the prohibition of Bitcoin. If the G7 nations, China, and the major regulatory bodies all simultaneously agree to enforce a complete ban, making the ownership, transfer, and the mining of Bitcoin a major felony, its utility and price would collapse. This would involve mandating internet service providers and block all Bitcoin network traffic and making it illegal for any regulated entity to interact with the network. This is improbable because we have passed the point of no return for a global ban. First, Bitcoin is a technology, and banning a technological protocol is like trying to ban mathematics or the internet itself. It can always be transmitted via non-conventional means. Second, we are seeing the opposite trend. Major financial powers are moving toward regulation and integration, not prohibition. The launch of Bitcoin ETFs, the involvement of major banks like Fidelity and BlackRock, and its adoption as legal tender in some countries all indicate that Bitcoin is now a geopolitical and financial force that is easier to regulate and tax than to ban. A ban would only push the technology underground, creating a black market where the asset would likely still retain significant value. Furthermore, a global consensus on a ban is nearly impossible in a world of geopolitical competition, as any single nation could gain a massive financial and technological advantage by not banning it. Number 3. The failure of adoption and the network effect. The most subtle and perhaps most powerful long-term threat is simply the failure of demand. If a superior digital asset emerges, or if the public loses confidence in Bitcoin's utility as a store of value, its network effect could decay, and the price could slowly trend to zero. The competitive threat: could a Bitcoin killer emerge? Thousands of competing cryptocurrencies have tried and failed. Bitcoin's advantages lie not in its speed or scalability, but in its uniquely decentralized, unchangeable, and proven security model. No other digital asset has the same level of decentralization, the same decade plus track record, or the same consensus around its absolute scarcity. Switching to a new system would mean sacrificing billions of dollars in established security and the network effect. Then there's the loss of confidence. This is the only true internal failure mode. If the community of developers, miners, and users ceases to believe in its value proposition as a censorship resistant, non sovereign hard currency, the network would die. But every time Bitcoin has been tested by crashes, internal disputes, or external attacks, the community and the network have responded with resilience, confirming its decentralized governance model. The longer Bitcoin survives, the stronger the conviction and the more entrenched the network effect becomes. In conclusion, the failure of Bitcoin would require a perfect storm, a breakthrough in analysis that is not immediately countered, and a collective global decisions by millions of users to abandon a functional tool for financial freedom. The system is designed to be highly anti-fragile. It gets stronger from stress. While the price can always crash, the system's architecture makes total, permanent failure highly improbable. But of course, none of what I'm saying is financial advice, and it's all for educational purposes. If you enjoyed this video and you want more videos about Bitcoin, about the technology and investing in Bitcoin, make sure to like the video and subscribe to the channel. Thank you for watching, and I'm see you in the next one.